So when you say you expect the geopolitical juggle and the geopolitical battle to intensify drastically, like what does that look like from your perspective, Florian? Is it just the shattering of globalization and the reshuffling of the chessboard? And those are analogies, but what's your take, man? I'd love to know.
Yeah, no. I mean, obviously, it will be intensified competition for all these necessary commodities. It will also mean more heat ups in hotspots like we've seen in Ukraine, we're seeing in the Middle East, maybe Taiwan. I mean, there's a lot of hotspots that could go really nasty over the next few years. Hopefully not, but it all depends, I think, on the new administration in the US. I think it's no secret that the Biden administration has not been helpful to creating more peace on the planet. Instead, they have created much more problems and wars. And I assume we will have to see who's in power in January. I think Trump at least he's more of a deal maker, and he probably will be also viewed as a strong statesman and a leader. And probably China will think twice to do any weird moves if Mr. Trump is in power. While if a weak president like Biden is in power, they actually have it easy, right? They're having an easy time to do their moves. So I think that Kamala Harris, in my opinion, has no real expertise. And it would be very difficult to even judge who's running the show. That doesn't mean that I'm supportive of everything that Trump does, but I see him as a strong leader, and that usually gains the respect of other countries. So I think that will be one of the biggest points probably to see over the next few months where this whole thing goes. And that also obviously plays a big role for the markets, because we've seen initially after the failed assassination of Trump that gold shoot up. You've seen a rotation from tech into value stocks. And then Biden announced that he's not going for presidency again, and Kamala Harris stepped up, and then suddenly big insecurity and uncertainty in the market. And that's maybe what's waiting for us over the next few months. A lot of uncertainty. Nobody knows how this will really play out.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode. You mentioned as part of the drastic intensifying geopolitical stress, intensified competition for commodities. And that is like a key part of my thesis for a secular run in the commodity cycle, is just as the supply chains become less predictable because, as we deglobalize, we're not sharing like we used to, and therefore the supply of everything is less predictable. And when the supply of anything is less predictable, the price goes up because you pay for predictability and security. How much does that factor into your long-term commodity thesis, Florian?
No, of course it plays a big role. However, I think in my analysis, the even more important role will be once the Fed really needs to step into the markets again and provide cheap money and liquidity. Okay. And I think this whole uncertainty around the US election, which could really escalate, the two parties are so split, the whole country is split like never before. And now with Kamala Harris, they finally have a new person to look up and to fight for. So the Democrats are basically back in a fighting camp. They were already close to giving up, right? And so I think it will heat up massively over the next few weeks and months. And again, markets don't like uncertainty. We've seen kind of more and more signals that the tech stocks might have topped. You know that it's been very unhealthy, the rally in the tech sector. Just very few stocks have been driving this whole rally in all the indices. Mainly it's been NVIDIA, and now NVIDIA is down 25% already over the last few weeks. If that's a top, which would be natural, and we have the summer doldrums now, and August and especially September, October are not really helpful for the stock markets usually, this could quickly become more ugly, and then suddenly we are back in a liquidity crunch, and then suddenly everything will tank, and then suddenly the Fed has to step in an emergency kind of like rate cuts and pumping money back into the markets. And I think that's the point where you're going to see the next leg up in the commodity sector. So that's actually my thesis. And it basically reminds me, and to my feeling, it tastes and feels a little bit like 2007 and 8 before the financial crash. Back then, you had oil going to 150, but then everything suddenly collapsed really quickly until the Fed stepped in. And back then, they also held interest rates up for much too long. And it feels a little bit similar like today. So that's my thesis actually for the next leg up in this commodity bull market. We need more cheap money again. And I mean, the markets are addicted to it. And I think it will come at some point. But usually the Fed is waiting too long, creating too much problems in the markets first. And that combined maybe with this the stressor and the uncertainty around the US election, maybe we see some more turbulences into autumn and maybe October, November, and then the Fed has to step in. Could be a scenario.
That's interesting. Yeah, the markets are definitely addicted to it. So as a consequence, the politicians are reliant on it in order to deliver the economic promises that you can fabricate, deliver with cheap dough. Okay. So then your timeline on that thesis, Florian, would be tied pretty closely to the election. Is that true, or can you walk me through your timeline a little bit?
Yeah. For now, I mean, I've been saying for a few weeks now, guys, relax a little bit. It's going to be the summertime. Don't forget, sell in May. This is it's not necessary to be fully invested over the summer months. Usually, you don't miss too much on the upside in July and August. Usually, after you've seen a rally in gold since October last year, you've seen a nice rally in silver. You've seen copper going up. Oil has held up well. I don't have the feeling that I could miss a lot over the next 2-3 months, while there is a lot of uncertainty and there is the potential for a larger pullback actually in the general stock market, which probably could also then pull back and create some stress in the precious metals in the commodity sector, simply because liquidity might be disappearing suddenly, So that's been my main thesis. And so I've been saying, take it easy. It's going to be the summer. I mean, there's also other things to do in life than just constantly running behind the latest news in the markets. Usually you get a good opportunity somewhere in September, October. That's where you want to be ready with a decent cash position on the sidelines. That always gives you the option to do something. I've met too many people fully invested, hoping for the next move up in the last few weeks. That usually tells me you want to be a little bit careful. I've seen also a lot of rookies, so to speak, who are now completely invested, bought their first round of mining stocks, and it feels like it's not the right time to do it. So that's my personal sentiment, kind of like feeling or takeaway. And so I feel like wait a little bit, let's see what's going on July, August. Normally you don't miss too much on the upside. And then let's see if we get a little bit of a stress in the stock market in September, October, you might be able to buy good names much cheaper than today. And so, I'm a bit patient at the moment.
I love that, Florian, and thank you for sharing it, because patience is like often the best trade, and it is it's very hard to practice, very hard, especially for new investors, right?
I know exactly what you're talking about, because trust me, I've been way too impatient most of the time, and I got only really successful when I was able to wait and to accept there's a new bus every 5 minutes. You don't have to chase. Just take it easy. There's always a new opportunity coming. And especially with these emotional precious metals kind of setups, like in gold now, you had a new all-time high after the assassination of Trump, but a week later, it's already down $100 and something. And I'm sure lots of small investors, retail investors have been buying into that top. And then if you look at the commercial positioning right now, the commitment of trades reports, a huge short position The seasonality is not really helpful for the next few weeks. I don't feel like I have to chase the markets at the moment.